Hey, this is Sasha Evdokov, founder of TradersFly.com and InvestingHelpDesk.com, where I answer some of your questions in detail about the stock market and trading and investing. So today's question is, what is the difference between penny stocks, day trading, and swing trading? So first, what I'd like to do is go in detail about the difference in penny stocks, day trading, and swing trading, what they are, and then just give you some pros and cons or advantages and disadvantages between them. Now, of course, we can cover a large deal just in penny stocks or just in day trading, but this will give you some ideas to go deeper into your study and research them in more detail, because we can basically spend hours upon hours just in any one of these subject matters. But this will just give you a quick little overview. So first off, what are penny stocks? Well, penny stocks used to refer to stocks that were priced at less than $1 per share. Now, with inflation and growth of the economy over the years, it typically refers to stocks that are less than $5 per share. Now, for me personally, I think of penny stocks as stocks that are lower in price, or the cheaper, the 10% of the stocks that are at the cheapest or at the bottom of the barrel. And at this point for me, I would say that's around the $10 or $12 range, somewhere between $8, $10, $12 range. That's typically what I think of when it comes to penny stocks, because if you define a specific number to a penny stock like $5, that means even if it's $5.12, it wouldn't hit that definition. So for me, I just think of it as stocks that are cheaper in price than the overall market. So then what is day trading? Well, day trading is not stock specific to price, whereas penny stocks are price related and talking about a group of stocks. Day trading is referring to the type of trading that you're doing. So day trading is when you hold a stock for less than one full trading day, which is less than 6.5 hours, because we have 6.5 trading hours in a day here, at least in the US markets. What that means is that you can get into a position at, let's say, 10 o'clock in the morning and get out of that position at 1 o'clock in the afternoon or 2 o'clock in the afternoon, whatever you want. But it's less than 6.5 hours before that market closes. You're in and out of that position. Whereas when you take a look at swing trading is when you hold a stock for multiple days, weeks, or even months. Now, there's a deeper level beyond swing trading. You also have long-term investing, and this is typically what Warren Buffett does. Is they do long-term investing is when you hold a stock or equity for multiple years or even decades into the future. So what are some of the pros and cons of penny stocks? Well, with penny stocks, you can buy more shares, which allows you to leverage on a percentage basis when the stock moves up in your favor or down in your favor if you're shorting the stock. Many think that a stock that is cheap cannot go much lower and has the potential for higher prices, but this is not always the case. Just because something that is cheap doesn't mean it has higher prices potential. Remember, typically stocks that are cheap for a reason. Many of them do not break out of that doghouse. It's very difficult for them to break out of that doghouse. As far as day trading goes, the pros and cons regarding day trading, again, now we're getting into the trading aspects. So you have no overnight risks or exposure. So when you're in and out of the trade, if the next day you have a gap down, you're not going to be exposed to that. The same thing, though, for the gap up. You wouldn't be able to capitalize on that. But you have no overnight risk or exposure. If there's a bomb that went off in Europe, if something happened, you have no overnight risk or exposure when you're day trading. You are also able to create higher frequency of occurrences in trades by reinvesting your profits. So that means you're able to trade from trade 1 and 2. You get your profits and you're able to reinvest those profits in trade number 3. Then the profits from trade 3, you're able to reinvest those profits again in trade 4, and so on and so forth. So you're able to compound your earnings a lot quicker than you would, let's say, with swing trading or long-term investing. Now, unfortunately, you do have higher commissions because you're doing more trading. You have higher commissions. You won't also profit from gap up days. So say a stock comes out with great news and, the next day something great happens, the stock pops. You wouldn't be able to get those profits because you were out of that trade and position. And at the same time, you also need to be at the screens watching the screens more often than you would if you're a longer term investor or a swing trader. So your attention needs to be a little bit more focused because you're in and out of that stock. It could be 10 minutes, it could be an hour, it could be 30 minutes, it could be 5 hours, but you're in and out of it. So you need to be watching your screen. So there's more time involvement and focus involvement when it comes to day trading. So let's jump over to investing pros and cons, which is the very long-term investing concept. So opposite of day trading, you basically don't have to time the markets perfectly since you are looking for long-term appreciation and value within your position. Now, you can also capitalize on dividends as you wait by holding on to your shares. So even if the stock moves sideways, you can get a quarterly dividend that those companies are paying out. Basically, even if the stock is not moving, you're still getting your dividends time and time again based on how many shares that you have. Now, unfortunately, if the stock does go down, the value of your asset there still depreciates, but you're still getting your dividends. So you do have that kind of risk on, but you still get dividends as those companies are paying out those dividends. So it allows you to make money by just sitting and waiting. And the more shares that you have, the more dividends that you would make. Now, there's less time involvement in the process of long-term investment compared to day trading or swing trading. You don't have to use a lot of fancy indicators. It's a lot easier to get started. You just need a general direction of market conditions. And then by all means, you can go ahead and put your money into the market. And now you're looking to go ahead and appreciate your value of your assets or your account. So based on whichever stock or equities or ETFs that you've chosen, they can appreciate through time. You don't have to be a rocket scientist, and you don't have to put a lot of time into the study of the process, meaning you don't have to learn those fancy indicators, technical analysis, all those different things. You just have to know a general market direction or when a good value time to buy is. Now, unfortunately, the downside behind this is that your profit compounding is limited since you have less transactions to reinvest your profits. You do save, of course, on commissions, but you aren't able to compound your earnings as quickly because you're not investing consistently time and time again and reinvesting those profits. You're only capitalizing from a longer-term growth strategy. Now, when we look at something in the middle, like swing trading, the pros and cons behind that is a balance between day trading and long-term investment. Now, you do have overnight risk when it comes to swing trading because you're holding something for days, weeks, or months to come. However, you are able to create a higher frequency of occurrences in trades than a longer-term investment. So that means you get more compounding on your money, but you're not going to get as many occurrences like a day trader. However, you do get to save on commissions, so somewhat it balances it out. It's also more calming to swing trade than day trading, as you don't have to be at the screens as much, but you still need to be attentive. So if things do go down, let's say for 4 or 5 days, you need to check and manage your positions if you're swing trading. Whereas with day trading, if things start to go down for 10 or 15 minutes, you need to take action very quickly. So with swing trading, it's a little more flexible. It's not as flexible as a long-term investor, but it's more flexible than a day trader because those little intraday moves won't affect you as much, depending on how large you're trading, of course. So you might be wondering then which one is better? Is it better to be a swing trader, day trader? Is it better to trade penny stocks or be a long-term investor? Well, it really depends on you. That's like saying which car is better. Is a hybrid better, a truck, a convertible, a motorcycle? They all can get you to a destination, but not all of them will get you to a destination the same way. Some of them, can carry a large load of lumber like a truck, and a hybrid may get you more gas mileage if you're looking to do a cross-country road trip. So they all get you there. It's just they get you there in a different way, and they have different flexibility. So you need to match your personality to what works for you. And if you're better at day trading, then stick to day trading. If you're the person that constantly needs to be in and out of positions, then that's what you should be doing. If you're better at swing trading, if you can be more calm and patient, then of course that's the right approach. Typically, you want to stay patient. Being in and out of trades too soon, too quickly will cost you an arm and a leg in commissions. It starts to add up. Not to mention you have that mental focus that's going to be drained if you need to constantly watch every single little tick in the markets of every little minute. So keep that in mind as you make your decisions. If you'd like to see more questions and answers like these, feel free to visit me at investinghelpdesk.com. And of course, if you want to see some detailed investing and trading educations and see some of my long educational series of, let's say, the Let's Talk Stocks sessions, then visit the website, my primary website, at tradersfly.com. Don't forget to sign up to my newsletter by just clicking this button right here, and that way you can be updated when the latest and greatest training is released, along with subscribing on YouTube. So thanks again for joining me, and I'll see you next time.